So global liquidity is spiking, and the Fed says that they are ready to inject more liquidity. So let's go ahead and dive in here. We're going to take a look at some BlackRock news. We're going to take a look at a couple of Bitcoin, Ethereum charts. We're going to look at the Bitcoin ETH ratio and talk about inflation. So Fed's Kashkari, this is the president of Minneapolis Fed, just said that the Fed has tools to provide more liquidity. And part of this is due to fears about what's going on in the bond market. So the 10-year yield is going up a lot. And I believe it's the most that it's gone up in a 1 week period all the way since 2000. So this is kind of a big deal. But basically what's happening is China is dumping a lot of their bonds. And whenever you dump bonds, the interest rate on those bonds goes up because the interest rate is inversely correlated to the price. So if you start dumping a lot of bonds onto the market, the price of a bond goes down because there's more supply. But if a bond gets cheaper, the interest rate goes up. And so that's basically what's going on in the bond market. So why is the Fed now feeling more comfortable to talk about injecting liquidity and cutting rates and whatnot? Well, that's because inflation's coming down. If we take a look, we're looking at the Forex economic calendar here. Yesterday, CPI data was expected to come in at 2.5%, but it actually came in under expectations at 2.4%. I didn't hear a whole lot of news about this, but this is a big deal because the Fed's goal is to get inflation down to 2%. We're basically there. Let's be real. Inflation is a thing of the past. If we take a look at the chart here, a lot of people are talking about, the tariffs are doing this or this policy is doing that. Really what it comes down to is that inflation has been trending down for a very long time now. It peaked out here at a little over 9% back in 2022. And we get this steep drop very quickly as the Fed increased its tightening of liquidity. And then it kind of tapered off, and we're on this slow grind lower. And this is what the Fed is watching. The Fed is watching the trend of inflation. It's not that big of a deal if we get a couple spikes of inflation. The overall trend is down, getting back to that 2% target that they want. What they don't want to see is they don't want to see this trend break and inflation come back up here and start making new highs going, 3, 4, 5, 6%. I don't think that's going to happen. I don't see anything that would cause that to happen. This huge spike in inflation was pretty much from all the money printing they did. They increased the money supply by 40%. And so that's what all of this was from. That's it. That's it. They can talk about supply chain, yada, yada. No, it was because you increased the money supply by 40%. That's exactly what happened. It's like you diluted the value of the purchasing power of the dollar. It's no different if you have a bowl of soup and you dump in 40% of water. You don't have more soup. You've just diluted out what you already had. So it doesn't taste as good. The money doesn't purchase as much. And so we come over to the Ethereum chart, we are seeing global liquidity spiking. Now, it has broken well above the 100 DEMA, and it's actually broken this prior lower high here. So this is, to me, is showing a trend change in global liquidity. I'm feeling a lot more confident that this isn't like a false breakout or something, that global liquidity is moving higher. Now, right now, it's only, from my understanding, it's the European Union and China that are pumping global liquidity for the most part. So we just have to keep an eye on this. Right now, it's looking really, really good, though. We come over here, we look at the Bitcoin chart. Again, you can see the pattern of global liquidity just spiking, and you can see how the global liquidity cycle is what drives each of these bull runs. So right now, this is pretty much just the start of the bull run. And if we want to compare where we are, previous cycle, I think we're basically like right here in the prior, that would be the 2016, 2017 bull run. So we have a long way to go, guys. Like, this thing is not over. The party is just getting started here. Moving on to the Ethereum Bitcoin chart. So everybody likes to attack Ethereum, saying, the fees are too high. The fees are way too high. That's why, it's bad Ethereum. And now it's, the fees are too low, bad Ethereum. It's not profitable enough. Well, it's not a tech stock, number one. But a much simpler explanation for the decline in Ethereum to Bitcoin is that it started whenever global liquidity started going down. So as global liquidity started to decrease, you saw the drop off in Ethereum to Bitcoin. And then whenever global liquidity rises, you see it gain on Bitcoin. Same thing in the past. Whenever global liquidity begins to tighten, you see Ethereum lose market share to Bitcoin. And when global liquidity increases, you see it gain against Bitcoin. It's just a repeating thing that's been going on for all the way almost a decade now. It's going on since 2016. So, people, they like to make up reasons why it's performing bad, but the reality is it's just global liquidity. We've been in a bear market since like November 2022, whenever global liquidity began tightening, and now it's spiking. We're breaking out of this tightening trend. So I do expect that this will reverse. Now we come over here, we can take a look at the real world assets. This is rwa.xyz. And if you take a look here, we're looking at let me just move this real quick. There we go, that's better. So we're looking at the BlackRock Biddle Fund, and you can see that the majority of it is on Ethereum, about 2.1 billion, and they have gone all the way up. They're up in the last 30 days, 189%, we'll call it 190% basically. They're gotten up to 2.3 billion in total assets, asset value. And I only expect this to grow. BlackRock's talking about how they want to tokenize all stocks and bonds. So total stock and bond market in the US is over $100 trillion. So we have a long way to go for all these assets to be tokenized. So India agrees to negotiate a new trade deal with the United States. So this is great news. As more of these deals start to be closed, we're going to see the market have sighs of relief as the tariff fears are put behind us and we can kind of move forward. And Trump had made the comment that there's quite a few countries they're very close to getting some sort of a deal done. So we just got to keep an eye on that. Hopefully that here within next week, maybe a couple weeks, we'll be able to get some closure on these trade deals and start moving forward with the economy. So moving on, Trump has made it clear he is open to a deal with China. Now, this is the big one. We really want to see a deal with China made and get China's whole trade war thing that's going on between the president and China. We really want to put that behind us. We don't want that to drag out. They are going to be the toughest cookie to crack, so to speak. They are showing the most resistance to coming to the table to do a trade deal. And I mean, as a result, they're dumping U.S. bonds. So we'll just have to see. We're going to have to keep an eye on that. This is kind of the wild card. We don't know what's going to happen here. This could be resolved hopefully quickly, or it could drag on. It really depends how these negotiations go. Now, one of the big things that happened, I thought that this was taken care of. It would have been, I think like a month ago, something like that. But they had signed the IRS crypto DeFi broker rule. And basically what this was saying is it was trying to categorize DeFi protocols as brokers, which would force them to report transactions to the IRS. Now, that's not really possible because it's decentralized. There's no KYC. That doesn't exist. So there's not really a practical means to try to keep track of these transactions. So it was really just a way to attack and try to kill this industry. And so now that has been repealed. It's gone. We don't have to worry about that anymore. I thought this had been taken care of already, but I guess maybe that was just an executive order to explore doing it. I'm not exactly sure what that was, but I do remember them saying something about it. I thought it was already done, but I guess not. So something else interesting having to do with stablecoins. So New York introduces a new bill to allow the state government to accept cryptocurrencies as a form of payment. And now it says in here that cryptocurrency, they're defining it as any digital currency in which encryption techniques are used to regulate the generation. So to me, this says stablecoins, for one, are now going to be accepted as a means of payment. And that makes a lot of sense because we're just seeing it get pushed so hard with, David Sachs talking about how they're going to create trillions in demand for U.S. treasuries through stablecoins, which implies trillions of stablecoins coming to the market. And I was thinking about that earlier, that if they had a concern about China dumping U.S. treasuries, I wonder if the trillions in demand for U.S. treasuries is going to be a way to combat the sell pressure from China selling U.S. treasuries. So just something to keep in the back of the mind. That might have been something that they were thinking about. But it also says that they would take Bitcoin, Litecoin, Ethereum, and other types of cryptocurrencies. I'm surprised I even heard Bitcoin Cash here. I haven't heard about Bitcoin Cash in quite some time. So I think that pretty much wraps up for today. If you have any questions, leave them in the comment section down below. And until next time, y'all take care.